Hello traders, the title of the video is how to trade the relative strength index significant peak like a pro. Alright, so recently we have posted a video at the Pro Traders YouTube channel talking about how to trade the RSI indicator, the relative strength index indicator above 80. What we are about to discuss today is a little bit different from that subject that we have discussed before, RSI above 80. But today we want to talk about, trading, the relative strength index, a significant peak, all right? So I want to remind traders that there are two methods to trade the relative strength index significant peaks, and also there are two types of market participants, all right, that will do two different things at a time when the relative strength index indicator has a significant peak, all right. Here it is. So what we need to do for the first time, we are allowing traders to look down instead of looking up. So we are using the RSI period 14, and we look at the RSI itself. We are looking for the significant peak. So there was one here where my cursor is. So when you see one, draw the line, okay? There's another one here, same level. Here again, same level. Here again, same level. So I'm not talking about any peak, all right? We don't want to highlight every peak. So you can start with the highest peak on the monthly chart. I would prefer that they use the monthly chart for this strategy, especially if you are a swing trading using the RSI indicator, all right? Though we can use it on any time frame, all right? On the monthly chart, it's quite powerful, all right? So fine, so here we will say this is the highest one, the highest peak, all right? So highlight the highest peak, and then try to find other peaks that are a little bit closer to this, but don't go too far away from the highest peak. You see here, if you call this one the highest, this is quite close to it. The reason why you need to do that is because, first thing first, you see where you have the significant high, all right? The question you want to ask, what has happened when the RSI has displayed the most significant high? All right? So when the RSI is quite high, has exhibited a significant high, it's telling us that the bullish momentum is very, very strong. So on this monthly chart, the significant high is in a zone of 97.52. All right, that's the significant high. 97, call it 98. All right. So looking at you want to check the history of the financial instrument that you are trading, checking, the price action at the time when the RSI has exhibited a significant peak. So here, if you examine that throughout the time, over the years, year after that, the price went up, yes or no? All right? At that point in time, the price went up. Price went up at that point in time. And then it pulled back a bit, and then we have, another peak again. All right? So RSI goes back again to the same point. So first time RSI peak has the significant high, price continued to go up. The bullish momentum was strong. So when the RSI exhibits a significant high, a significant peak, and the price is breaking resistances, we'll continue to buy. But I don't want to get into that, otherwise it will be similar to the RSI above 80. What I'm about to discuss today is a little bit different, and I'm very careful not to repeat myself and talk about RSI above 80. So the point I'm making to you here is that very often, if you look at many charts, especially on the monthly chart, you see that when the RSI has a significant high, okay, the price, we will have a trend. But before the trend, you see that the price will go up a little bit first before pulling back. Again, if you monitor this one here, I'm still here. All right, something that you can see that when the RSI exhibits the second peak, price went up and then it pulled back before going up. All right. So the first strategy is that when the RSI exhibits a significant high, draw a line on your chart. All right. If the price breaks above it and finds support, we'll continue to buy it until the price, okay, fail to display a new high. So RSI exhibits a significant high, as you can see on the monthly chart. We draw the horizontal line at the point where the RSI exhibited a significant high. We say priority to bullish signal above and priority bearish signal below. If the price finds support above that level, we'll buy. But we need to be careful. If the price fails to form a new higher high, we will sell. But you need to be careful because the RSI has peaked, is indicating to us that the bullish momentum is very, very, very strong. There is a high chance that we may have a trend. That's what I want to say to you. So when the RSI has a significant high on the monthly chart, significant peak on the monthly chart, most importantly on the monthly chart, we can expect after a few months, even a few years, you can see that it took almost 2 or 3 years, all right, that there is a high chance that after a few years, we need to monitor this stock carefully, that we are likely to see a trend. The second thing that I want to say, because I say two methods, when the RSI has a significant high, we draw that line. You have to understand that if the price fails to find a support above that level, we will have a reversal. So understand, when the RSI exhibits a significant high, we have two scenarios. After a few months or few years, we may have a strong trend, or we may have a reversal. So I'm talking also about two types of market participants. One group of market participants looking for a reversal at the point where the RSI has peaked. Another group of market participants are buyers, are bullish traders, and they are expecting the price to break a resistance level, and they know that there is a high chance that we may have a trend. The trend may not take place straight away. The trend may take place after a few months or even a few years. So two types of market participants, one looking for a reversal, if there is a reversal, one waiting patiently for that strong trend to begin. So we are looking for either a reversal or a strong trend to take place. The trend may not take place straight away. So if you look carefully, if you understand what I've already said, this is a significant high here. All right. So at that point in time, we'll draw that horizontal line. Very, very important. We want to know the drill. All right. So we draw that line. We say priority to. Well, I'm going to color it now into orange. Can you see on my chart? Am I zooming into it enough? I need to learn more of this software. Okay. Prior to bullish signal above the level of $5.74, prior to bearish signal below it. So as a technical trader, if you find a support above you, you buy. But you will also be careful. Why? Because you know that there are another group of traders that are looking for reversal. So we are monitoring the new high. If the price fails to form a new high, we will sell. But if you are selling, be careful, because after the pullback, we may have a strong trend. Okay, that's it. So here you can see, as you can see here, it went up a bit, now form a double top, pull back a bit. But after that, look, we have a strong trend, yes or no? Then we have a trend. So you can wait patiently until the price pull back, and then, so you see significant high, you are a bullish trader, wait for the price to go up a bit more, and then pull back gently, draw your trend line, draw your channel, and then buy to catch, okay, that strong trend. Again, if you pay attention to that, we can use that as an investor, as a hedge fund, as a position trader, as a swing trader, and also as a day trader. So as always, if you learn something new for the first time, don't just go and splash and use it the same day and lose money all over the place and come back and say that this strategy does not work. That's not the best approach. Okay. Use a demo account, work on it, okay, at least for a month or so. See the different scenario, the different challenges, okay, before going live. That's the best approach. Don't just use it, okay? So if you are here, either you want to be a buyer, you can say that after a few months, or even after a few months or a year, we may have a strong trend. Here it is. Your strong trend has started, so has peaked, has been a long time. Are you an investor, patient investor? It has peaked in 1995, and the trend has started in 1998. All right, that significant high was signaling to us that in the near future or so, we may have a trend. Same scenario here, significant high, alerting us the possibility that in the near future or so, 2 to 3 years, or few months, all right, we may have a trend. That trend was here, all right. Okay, that's what we are looking for. But we want to concentrate only on the significant high. So you want to select first the highest peak on the monthly chart, and then choose either one that are quite close to it. This is this one. I am ignoring those ones that are quite below it. All this I'm ignoring. This is quite close again. So here again, here we are. If you are a reversal trader, the RSI has significant peak, you want to sell, draw the line, the horizontal line, okay. So that's the warning line. So you say, all right, if you fail to find a support above it, but instead find a resistance below that orange line, I will be a seller as long as the price is exhibiting lower lows and lower high, attention to the new lower low. If it fails to form a new lower low, you will not sell it. And then, if you want to join a bullish trader that are expecting a bullish trend, here it is, you see, significant high, possibility that the price may go out, prior to bullish signal above that warning line, here it is, it's going up big time. Alright, so this is not about RSI above 70, RSI above 80, it's about RSI significant high, and this strategy will work beautifully on a monthly chart, especially if you are looking to buy and hold, waiting for a best opportunity to catch a long time, okay, a long-term trend, right? Going to drop down to the daily chart and see whether as you drop down to the lower time frame, you may see that it may not work beautifully. So here, this is another significant high here. You see here we have a reversal, you see. So this is what I'm saying to you. There are two types of strategy. There are two types of market participants. One waiting patiently for a trend, another one waiting for a reversal. Draw the line, understand that a reversal can take place if the price fails to form a new low, a new high, all right? So if there is a reversal, don't ignore it. Here we have a reversal. Significant high, you draw it. Significant high, again, this zone. It failed to form a new high. Here we have again, it went up a bit. And then reversal. Significant high, two types of market participants. Reversal trader, patient trader that are waiting for a new trend. So if you see the significant high, you may say, all right, I don't want to sell, I'll wait. So you can draw your line until it break below, it break above those, the bearish move, the pullback is finished. Now you're expecting your trend that the significant high was pointing to you. Because very often, after the significant high, if the price pull back for a while, they usually have again a new trend up. As always, do not use it as 1 + 1 = 2. Especially if you're a new trader, you think that that's the way it works. Okay, don't think that way. Nothing is set in a stone in the financial market. All right, so just concentrate on the price action and you will be all right. Trade the price instead of trading the RSI. Here we are using the RSI, we are looking down, but understand that we are not trading the RSI. If you start trading the RSI, Well, you'll be doing all kind of things, and it's a wrong way to use the RSI. We acknowledge the RSI. Now we switch our attention to the price to make excellent decision. Okay, using the definition of an uptrend and definition of a downtrend. All right. If you have any question or suggestion, put in the comment section, and in due course, I will be recording another video to answer your specific question. I hope I have managed to explain everything clearly to you, and I have differentiated the difference between the RSI above 80, above 70. That's not the case here. We are talking about a significant high. We don't want to select any peak. RSI peak, all right? We don't want to select any peak. We want to select the significant peak, all right, and expect either reversal or after a pullback, a new trend. In all cases, we draw the line, we control the risk, and we use a top-down trading method to trade it. If you find this video truly useful, personally, give us the signal, thumbs up. If you think that this is another useless video, do not hesitate to give us the thumbs down. However, if you think this is an essential tutorial, feel free to share with your friend on Google+, on Twitter, on Facebook, and also on Reddit. Until the next time, enjoy yourself and be very happy. We are the GSTW24 traders talking about how to trade the relative strength index significant peak like a pro. Happy trading to you all and speak to you soon.